Hello, neighbors, and welcome back to the neighborhood. I am Squealer D, and I am back again. And this time, friends, we are in the world of finance learning what is MACD, this Squealer D always talks about. I don't really know, guys. I know that it's an indicator. I know that it shows us entrance and exit and momentum. But today, my friends, we are going to find out the secrets, according to Brian Dolan, about the MACD line. So, you know it has to be important. It's called MACD, like Squealer D. So, first off, should we read or should we check out the news? I always get worked up over the news. Let's read first and then we'll check out the news. Fact check by Katrina Municiello. There we go. I got it. That's a great last name. Municiello. I like that last name. Okay. So here we go, guys. MACD line. We've thrown them up on Thinkorswim and also on Yahoo Finance. They're very easy. On both to throw up. If you just go to Yahoo, pick a ticker and pick Riot. I like Riot, guys. Riot's having a riot. Look at it. It's volatile today. Anyway, so you click on it. If you go to indicators right here, you see my little fingers. Indicators. These are indicators that are commonly used. The moving average. We learned about Bollinger Bands. Remember, they show the the upper resistance and lower resistance, the RSI, and the MACD. You just easily throw a MACD line up there. This is the period. The MACD will be purple. So, we got two MACDs up there now. But yeah, this is the MACD line. Cancel. Can we zoom in on the MACD? Oh, there we go. Look. We can make the MACD real big. So the yellow is the signal. Increasing bar, decreasing bar, MACD. Okay. So that's the volume. That's the MACD. Okay, so that's what it looks like. And we are going to learn about it. It's technical analysis, guys. We've learned about technical analysis that we use so that we can make good decisions on entry, exit points, and choices for risk management to make good trades, guys. You can't make money off the stock market if you don't buy and sell. So, what is MACD, guys? MACD is the moving average convergence divergence. Big, gigantic word. Moving average convergence divergence, MACD. It's a trend following momentum. So it follows a trend. It's a momentum that follows a trend. It's an indicator that shows the relationship between two moving averages of a security's price. So, two moving averages, two of them. And it shows the relationship between the two. Like that. See their relationship? When one goes up, the other goes up, but not exactly together. Let's learn more. Okay, so between two moving averages of securities price. So what is moving average convergence divergence, or MACD? Moving average convergence divergence, MACD or MACD, is MACD or MACD is a trend following momentum indicator that shows the relationship between exponential moving averages of a security's price. The MACD line is calculated by subtracting the 26-period EMA from the 12-period EMA. The result of the calculation is the MACD line. A 9-day EMA of the MACD line is called the signal line, which is then plotted on top of the MACD line, which can function as a trigger for buy or sell signals. So, the signal line is the orange one, guys, right? Yep, signal is orange one. So, it goes on top of the MACD line to signal buy or sells. Traders may buy the security when the MACD line crosses above the signal line and sell or short the security when the MACD line crosses below the signal line. So, MACD, guys, purple. Signal, orange. MACD, purple. Okay. So when it crosses over the orange line and goes up, that's a buy signal. And then when it crosses back down over the orange, that's a sell signal. Then when it crosses back over the orange, that's a buy signal. Then when it crosses back down over the orange, that's a sell signal. So we're in a sell right here. When this crosses back over the orange, it's a buy signal. You see that? The purple is going to come back up over the orange, and that's going to be a buy signal. So traders may buy the security when the MACD crosses above the line signal and sell when it crosses below. MACD indicators can be interpreted in several ways, but the more common methods are crossovers, divergences, and rapid rise falls. Key takeaways. The moving average convergence divergence, or MACD line, or MACD, or MACD, is calculated by subtracting the 26-period exponential moving average from the 12-period exponential moving average. The signal line is a 9-period exponential moving average of the MACD line. Okay, so there's a bunch of moving averages. MACD is best used with daily periods, where the traditional settings of 26, 12, 9 days is the norm. MACD triggers technical signals when the MACD line crosses above the signal line to buy or falls below it to sell. MACD can help gauge whether security is overbought or oversold, alerting traders to the strength of a directional move and warning of a potential price reversal. MACD can also alert investors to bullish, bearish divergences when a new high in price is not confirmed by a new high in MACD, and vice versa, suggesting a potential failure and reversal. After a signal line crossover, it is recommended to wait for 3 or 4 days to confirm that it is not a false move. So, let's see if it would have lasted. We'll just zoom in on this one. Here's a MACD crossover. When did it cross over? 3:14. Then there's the 1 day, 2 day, 3 day, 4 day. And then they say buy. And on the 4th day, you wait for it to keep going up. And when it went back down, went back down on 420. So how many days did it? I think it happened on 314 to 320, so 6 days. It was like a 6 days above the line. And how many days will it stay below the line? So if it went down on the 20 and it's still down below the line on the 10th, then it's been down longer than it was up, right? The 20th all the way until the 30th, that would be 10 days. And then another 10 days, that's 20 days. And this one, oh, it was a month. I thought it was 415, 315. So a month it was above. Okay. Okay, so MACD is a 12-period EMA minus with a 26-period EMA. Those are the two. That's the formula. MACD is calculated by subtracting the long-term EMA from the short-term EMA. An EMA is a type of moving average that places a greater weight and significance on the most recent data points. So the exponential moving average is also referred to as exponentially weighted moving average. An exponentially weighted moving average reacts more significantly to recent price changes than a simple moving average, which applies an equal weight to all observations in the period. So, learning from MACD. MACD has a positive value, shown as the blue line in the lower chart, where whenever the 12-period EMA, indicated by the red line, is above the 26, the blue line, and a negative value when the 12-period EMA is below. The value of the distance the MACD is above or below is baseline, indicates that the distance between the two EMAs is growing. Okay. So one's negative. We got two lines. They put them down, MACD and a signal line. Okay. I wish that the MACD line laid on top of this. I'm not going to lie. I like that better. Okay, so let's read that one more time. MACD has a positive value, shown as the blue line in the lower chart. So, positive value. Whenever the 12 period EMA is above the 26 period EMA, okay, so if it's above, it has a positive value. If it's below, it has a negative value. Okay, in the following chart, yeah. So if it's above the line, and it's positive, and then they're just saying it's negative. In the following chart, you can see how the two EMAs applied to the price chart corresponding to the MACD crossing above or below its baseline. You can see it going. So here's the baseline. That's 0. You see 0? And if it goes up, then it's going to be positive, right? But then when it dips back down here below the baseline, it's negative because it's below 0. And then if it comes back up above, it's positive again because it's up here above 0. Makes sense. MACD is often displayed with a histogram that graphs the distance between MACD and its signal line. If MACD is above the signal line, the histogram will be above the MACD's baseline or 0 line. If MACD is below its signal line, the histogram will be below the MACD's baseline. Traders use the MACD's histogram to identify when bullish or bearish momentum is high and possibly overbought or oversold. So, when it's above, they're up here. And when it drops below, they're down below. And when it goes back up above, it's up above. See, these are the histograms right here. And when the blue line is up above the orange line, it drops down right here. The histogram drops down below the baseline. This is the baseline. So then when it goes, it's down. All these reds are down below the baseline. When it crosses back over right here, back up, then they're above the baseline. So MACD versus relative strength. The RSI, or the Relative Strength Index, aims to signal whether a market is considered to be overbought or oversold in relation to recent price levels. And that's what they said. If these momentums are high or low, sellers could tell if it's overbought or oversold with the histogram. So that's how they're the same, right? They both do that. They both show that because an RSI also shows that. So the RSI is an oscillator that calculates average price gains and loses over a given period of time. Gotta drink my coffee, guys, before it gets cold. You know how I feel about cold coffee. It's extra good today. It's like super coffee today. So, the RSI is an oscillator that calculates average price gains and losses over a given period of time. The default time period is 14 periods. How long is a period? How long is it? We might get a weird answer to this, but we're going to do in stocks. For a common stock, the holding must exceed 60 days throughout the 120-day period, which begins 60 days before the ex-dividend date. Preferred stock must have a holding period of at least 90 days. We don't know what it is because it's a lot. 60, 90, 120. What is it, guys? 60 days. 120-day period. So we're guessing it's like a 120-day period. 60 days. 14 periods. A reading above 70 suggests an overbought condition, while a reading below 30 is considered undersold, with both potentially signaling a top is forming or vice versa, a bottom is forming. The MACD lines, however, do not have concrete overbought, oversold levels like the RSI and other oscillator studies. Rather, they function on a relative basis. That's to say, an investor or trader should focus on the level and direction of the MACD signal lines compared with preceding price movements in the security at hand as shown below. So, MACD looks overbought from previous highs. So they're showing us, here's the high right here you see where they got high. And then here is the overbought territory and underbought territory on the RSI. So as you can see, it almost ticked up here out of the way, and then they have it marked. And then it did tick up overbought here, and it showed here. So whereas this one had a clear line that it was overbought, this one showed twice that it appeared right here and right here that it appeared overbought. And this one showed that it was overbought. So MACD measures the relationship between two EMAs, while the RSI measures price change in relation to recent price highs and lows. These two indicators are often used together to give analysts a more complete technical picture of the market. So that makes sense to have an RSI up and a MACD so you can compare these high highs and high lows. No, low lows and high highs. Say it right. Got it right. Okay. So these indicators both measure momentum in a market, but because they measure different factors, they sometimes give contrary indications. For example, the RSI may show a reading above 70, which is overbought for a sustained period of time, indicating a market is overextended to the buy side in relation to recent prices, while MACD indicates the market is still increasing in buying momentum. Either indicator may signal an upcoming trend change by showing divergence from price. Price continues higher while the indicator turns lower, or vice versa. So they're saying up here, up at the highs, this might still be a high, and this one is already turning down because they read different, but they measure momentum, but different factors of momentum. So this may stay up longer than this, giving. So what they're saying is use both of them, because this one alone or this one alone might not give you the whole picture. Pretty much that's what they're breaking it down to say. Use both. They do both different things. One, they both measure momentum, so you think you're using one for momentum, but they measure different types of momentum in the market, so it's better to use more than one. That's what we're taking away from this, guys. If you know more than me, correct me in the comments. We like to be correct. But that's what we're going to take away from this, that what I just said. They both measure momentum, but they measure different factors. They measure different factors. That's the way to say it. So they both measure momentum, but different factors of momentum. So you may have the market still increasing on MACD, but it's not on the RSI. And that's okay. Guys, sometimes when you look at something, it's a little bit different, but it gives you more information. And that's what they're saying. Use more information. So let's read about the limitations of MACD. One of the main problems with the moving average divergence is that it can often signal a possible reversal, but then no actual reversal happens. It produces a false positive. The other problem is the divergence doesn't forecast all reversals. In other words, it predicts too many reversals that don't occur and not enough real price reversals. This suggests confirmation should be sought by trend following indicators such as the DMI, or the Directional Movement Index System, and its key component, the Average Directional Index, the ADX. The ADX is designed to indicate whether a trend is in place or not, with a reading above 25 indicating a trend is in place in either direction, and a reading below 20 suggesting no trend is in place. Let's see if they have that. The Average Directional Index, guys. See what it is. We pop up here to indicators. What was it called? ADX? Yeah, we found it. There it is, ADX. Let's throw it up there. Okay, ADX right here. We got the DI is green, the negative DI is red, ADX is black. Okay, ADX is black. We know that. Let's make this little puppy smaller. And this guy bigger. Oh, we got too many MACD lines here. How do we take this one out? I don't know. We click on it. Okay, so let's split screen it like this so we can see. So here, no. I just want to do that. Come on. Okay. Here we go. Forget this little tiny one right here. We're looking at this big one and this one, and I don't know why it's having multiple issues. I got too many indicators outgoing. So the black line is the ADX line. So let's learn about it so we can know. So whether it's a trend is in place or not, because they said the MACD line could be wrong. So if you use this, the DMI and the ADX, it's designed to indicate whether a trend is in place or not. So let's see. So, for instance, where's our other line? Nope. Oop. Well, okay, I don't know. I can't get that to work, but we'll see. Investors following MACD crossovers and divergences should double check with the ADX before making a trade on MACD signal. For example, while MACD may be showing a bearish divergence, a check of the ADX may tell you that a trend higher is in place, in which case you would avoid the bearish MACD trade signal and wait to see how the market develops over the next few days. On the other hand, if MACD is showing a bearish crossover and the ADX is in non-trending territory and has likely shown a peak and reversal on its own, you could have got a good cause to take the bearish trade. Excuse me. My throat is dry. Coffee's great, guys, but can't go wrong with water, you know? Got to drink as much water as you can. Okay, so take a quick look really again. So if it goes over 25, they said, what is it? So less than 25, non-trending territory. A trend is in place over 25. So let us see, guys. Here's 26. It's at 26. So here is a trend taking place. It's going down. Where's 25? Anything over this line right here, a trend is taking place. So we can see a couple times. We could check with this. So, for instance, guys, hold on. Here, we're way over 25, right? The black line is way over 25. So, if we look up here, we can see that the MACD line is the purple one, guys, and it's up over, crossing down, right? So we go back down here. It's still over, so the trend is still happening. Okay, that makes sense. So you guys, here, the purple line is over. It's kind of hard to see, but if you look up real closely, let's zoom it in. Okay, come on, guys. I want you to be able to see this really good. Okay. So here, for instance, here's the 25, right? So let us see. Right here. It's at 57, okay? The black line is at 57. That means it's over. It's a trend. It's trending. So here it is, same spot. The purple line is over, but it's crossing down. So it's trending down, right? But here, where this is trending down, this is still over 25. It's at 35. So perhaps it's not, they're saying that the trend isn't over, right? Because it's above 25. So this is saying that the trend is down. It's going down and it's done, right? But this one, the ADX, is saying that the trend isn't done because it's still above 25, guys. It's at 33 right here. It's going back up to 42. And as we can see, it bought back up over here. It never went down negative. It stayed above the zero line, and it's going back up. And now we can see that it's going up here all the way up to 54. It's up. It's up. It's up. It's up. It's up. And we have another crossover right here where it crosses back over. And this might also be a false crossover because it, right here where it crosses over, it's still at 50. So it's still up. It doesn't cross down until get back down below 25 until right here where it crosses over this green at 27. And at that point, it's crossing back up over, but just barely. We could see it's actually on a lower trend. But once you get back down here, if you were watching both lines, you wouldn't worry about this crossover as a place to get in, because remember, look how close it is to that orange line. We want to see a trend go up, 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 up before we buy, like this one, up, 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 up before we buy. And this one isn't doing it. And if you look down here, it's not doing it because it's dropping well below the 25 level that they told us. It doesn't, all this is down below the 25. So none of these would be signals for buying or selling unless you're doing options and you want to say that it's going to decline, because it just kept declining. So we don't get out of the 25 area until right here where it crosses back over. And that, my friends, is back here where it's already getting ready to cross back over anyways. And you could see it making a slow rise up, but you might not want to get in because it's below the 25 down here. So it's not trending. You can see, and it's not trending up here. The line stays down below 20, 25. And when the line stays down below 25, this line is pretty much just a continuation line. It's just straight. It's not, the same amount of movement. Really not a lot of volatility. So we get over here and we got, our line is going up, and this is an entrance to buy when it crosses over up, right? So then we would check our MACD line. What's it at? It's at 25. Let's wait and see. It went down instead of going back up. So we wouldn't go in right there. Then we see again it crosses over right here. You see the purple line is going up, guys. So we might think, wow, this is a good buy, guys. Let's buy in right here so we could sell right here, right? So let us check the ADX. What's the ADX at? The ADX is at 15. So maybe wait. Let's see. Is the ADX going to go up? It starts going up. You wait a little while, a couple days, and it does go up. It's going up. Once it hits right here, you're good to buy. It's at 25. Wait, what is it at? Sorry, guys. It's at 26 right here. And this is when most people bought. If you zoom in a little bit closer, guys, if you look at how the green went up right here and right here once this ADX went up over to 25. It was here. It was at 20. When it went to 24, this green dot went up more. You see there's more than this one. So it looks like people were watching both. And then it goes up. Once it starts to drop down below this line, that is a measurement. This is an indicator to sell for the MACD line. Once it goes below the orange, it's an indicator to sell. Check with it's at 29 here. It's going down, going down, going down. Right here, you need to sell by right here. Because it's going below the 20. See, it's back down low. And we stay low, and you can tell that this is low. It's in the negative. This is low, 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 low. We have a little bump here. You see it goes up to 32, and this is right where it crosses over, so you could check. We have a crossover here that it might be going back up. How high is our ADX? Well, it's at 31. It didn't stay. It's going down, 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 down. We don't want to be in it here. This is to sell a downward trend. But we notice that the purple line's coming back up here. Do we want to get in a buy? We don't know. Let us check. Let us check with our black. What do we got down here? We're only at a 22. We probably shouldn't buy it. We shouldn't buy it all the way until it gets here, guys. And it starts crossing back up into the 25. And you can see the purple's having a problem. I don't know if I would get in on a buy with the purple, like knowing what just the limited amount I know. I don't know if I would do this crossover right here. It barely crosses over, but it is above. So you can see that this line is barely showing a growth. But this line, the ADX, is showing that it's above 25, so it would be fine. So might not make a lot, but it's still an upward trend. You wouldn't be, going back down. Okay. So let us keep reading because that is interesting. I like to know that. So indicators following MACD crossovers and divergences should double check with the ADX before making a trade on MACD signal. For example, while MACD may be showing a bearish divergence, a check of the ADX may tell you that a trend higher is in place, in which case you would avoid the bearish MACD trade signal and wait to see how the market develops over the next few days. On the other hand, if MACD is showing a bearish crossover and the ADX is in non-trending territory, less than 25, and has likely shown a peak and reversal on its own, you could have good cause to take the bearish trade. Furthermore, if you see let's understand this before we go on. On the other hand, if MACD is showing a bearish crossover and the ADX is in non-trending territory and has likely shown a peak and reversal on its own, you could have a good cause to take a bearish. So if we wanted to go down, let us little this a little bit more. Okay, so if it's trending down, I don't think we have an example of that. We'll have to wait. It's okay, guys. We're going to go over this a couple times. So if you're still confused, we are going to talk about the MACD and now this ADX line all the time, which is average directional index. Okay. Furthermore, false positive divergence often occur when the price of an asset moves sideways in a constellation, such as in a range or triangle pattern following a trend. A slowdown in the momentum, sideways movement, or slow trending movement of the price will cause MACD to pull away from its prior extremes and gravitate toward the zero lines, even in the absence of true reversal. Again, double check the ADX and whether a trend is in place before acting. So that's what they're talking about, this part right here where it's just kind of flat. It just pulled to the middle line. Even though, see how it's kind of flat, guys? It pulled to the middle line, even though down here we're still above. It's still bearish here and bullish here. The MACD line pulled to the line. And that's what they're talking about. So what we learned today is if you use the MACD line, also use the ADX line to confirm. Confirm bearish or bullish. Guys, what does bearish mean? That it's going to bear down on you. And it's going to go down, 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 down. And what's bullish mean? Bullish means you could get hooked by those bull horns and thrown up into the sky. So it goes up, 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 up. Bearish down, bullish up. Good way to remember it. So we got some examples here. We're almost done, guys. Example of MACD crossovers. As shown on the following chart, when MACD falls below the signal line, it is a bearish signal indicating that it may be time to sell. Conversely, when MACD rises above the signal line, the indicator gives a bullish signal, suggesting that the price of the asset is likely to experience upward momentum. Some traders wait for a confirmed cross above the signal line before entering a position to reduce the chances of being faked out and entering a position too early. And guys, it is all fine for a trader to make fast moves when they have a lot of money. It is not a good idea if you are working with limited funds to have fast moves. We need to take our time and confirm like everything suggests, because if you get in too early and it fakes you out and you lose, let's say you lose $25, that's $25. And I'm not saying to cry about money or to care about money. I'm saying be smart about money. And if you can prevent that by just confirming, do that. Don't get into something that you are not willing to take time and confirm. Lots of people have no patience and they don't want to learn things. You don't have to be smart. I say learn, guys. Anybody can learn. You can teach somebody that is handicapped to tie their shoe. That means they learned, right? You can teach anybody anything. Some people won't learn it all, but you can teach them it. You can attempt to teach them anything. And so what I'm telling you is if this is not what you want to do to learn, remember things, you have to remember, guys. You have to remember what a MACD line is. You have to remember the indicators that you need. If that is not what you want to do, let's say you have a hard time remembering things and you don't want to write it all down. I would say that trading is not for you. Maybe get a second job. It sucks, but there's only so much we can do in our lives to make money. And most of that is time related. We trade our time for money. And so you can use your time however you want. You can use your time learning things to make non-physical money, or you can use your time physically to make money. And some of us are not people that want to learn and do things non-physically. They don't want to use their brains and their thinking caps to make money. And that is fine. I'm not saying anything bad about those people. It's just like somebody who wants to be a stunt car driver. I would never get in a stunt car, but I have no problem with somebody being a stunt car driver. That's on them. And if that makes them happy, hey, big thumbs up to the stunt car drivers. But just like that, perhaps you cannot get all this stuff. This is too much for you. Or you just don't want to. That's okay. Don't try to force it, guys. If you start to learn this stuff and it seems like too much, don't put your money into something that seems too much for you. You wouldn't go to a arcade and put your coins in the hardest game. You wouldn't do it. There's no way I would go play Street Fighter at the arcade. I wouldn't waste my coins. I would get killed every single time. But I may, if they had like a Call of Duty game at the arcade, I may go put all my money in the Call of Duty machine because I like first-person shooters. I like that. I enjoy it. I want to learn more about first-person shooters. If you cannot, we are 28 classes in now today, guys. If you have watched all my classes and you just can't, this isn't for you, nope out, guys. It's okay. It's okay to nope out of stuff. Do not go into this with your $5,000 savings and waste it all because you did not want to learn what an ADX and a MACD were or remember what they were. Some people can't remember when their tags are due. So I get it. I really do. Do not waste, and I'm not trying to put anybody down or be hateful to anybody. I'm simply trying to help you save your money because this is a big investment. It's an investment in your life. This is not a hobby, guys. It is a way to make more money than what you're making right now. It is a way to be educated and be intelligent about what's going on in our world today. But it is not a necessity. You could do you could do the same thing by going out and getting a second job. You could make extra money. Yes, it will take your time. This takes your time. Everything takes time. You have to decide how to use your time. That's what I'm trying to say. So don't feel discouraged if it's hard for you. But also, if you don't want to do it, don't force it. Don't do this just because somebody told you to learn the stock market. Okay? That's mine. That is my plea to you guys. Please do not waste your money and time. So, crossovers are more reliable when they conform to a prevailing trend. If MACD crosses above its signal line after a brief downside correction with a long-term uptrend, it qualifies as a bullish confirmation and likely continuation of an upturn. So, if it comes here and goes up, it's bullish, guys. See the signal line down here? And it's just coming up, 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 up. Come down here and go up, 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 up. Those are bullish signals. They're going up, 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 up. So that's a confirmation that is going up. So if MACD crosses below its signal line, following a brief move higher within a long-term downtrend, traders would consider that a bearish confirmation. So see it went down, 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 bearish confirmation. When MACD forms highs or lows that exceed the corresponding highs and lows of the price, it's called a divergence. So when it higher highs, a divergence. Okay, so let's see a divergence. A bullish divergence, see how it went lower? This is a new lower. It was here, it went here, it went here, here, and now it's here. It's all the way new lower. This is called a bullish divergence. See how the MACD line touched down at a new low low? That's a bullish divergence. So, a bullish divergence appears when MACD forms two rising lows that correspond with two falling lows on the price. That is a valid bullish signal when the long-term trend is still positive. So, we're still above the zero line. And then we got these two new low lows, and they went down. See how it dipped down below the line twice, once there, once there. Here's the line, dipped it and dipped it. So that is a long-term bullish signal. When MACD forms a series of two falling highs that correspond with two rising highs on the price, a bearish divergence has been formed. A bearish divergence that appears during a long-term bearish trend is considered confirmation that trend is likely to continue. Some traders will watch for bearish divergence during long-term bullish trends because they signal weakness in the trend. However, it's not as reliable as bearish divergence during a bearish trend. So here we have two, and this two high highs. See, they're higher than highs. Bearish trend. When MACD rises or falls rapidly, the shorter term moving average pulls away from the longer term moving average. It is a signal that the security is overbought or oversold and will soon return to normal levels. Traders often combine this analysis with the RSI or other technical indicators to verify overbought or oversold conditions. So we can see here that it rose. This is the RSI. And this is the MACD. So here and here, they're saying they were rapid rises and they were overbought. It's a signal that the security is overbought and will soon return to normal levels. It is not uncommon for investors to use the MACD's histogram the same way they may use the MACD itself. Positive or negative crossovers, divergences, and rapid rise or falls can be identified on the histogram as well. Some experience is needed before deciding which is best in any given situation, because there are timing differences between signals on the MACD and its histogram. So, you look on the histogram, you can see the rapid rise right here. It's not as clear here. Like, here it's bright green and there's a bunch of them. Here it's not as clear to me on the histogram, because this histogram seems littler than this histogram, but there's not a rapid rise right there. And this one even seems bigger. So I agree that some experience is needed, because we'll have to look at a bunch of those before we understand how the histogram could show us a rapid rise and overbought. How do traders use moving average, convergence, divergence? Traders use MACD to identify changes in the direction of or strength of a stock's price trend. MACD can seem complicated at first glance because it relies on additional statistical concepts such as the exponential moving average, the EMA. But fundamentally, MACD helps traders detect when the recent momentum in a stock's price may signal a change in its underlying trend. This can help traders decide when to enter, add to, or exit a position. And that's what we just learned, guys. We just learned about entry and exit of a position. And so it's great to learn ways to enter and exit a position. If this is your first video, guys, or you just want to learn more about the stock market, I have a lot of other videos. Today is day 28. So we have 27 other videos in our folder. It's called Stock Market Learning. You can jump into that folder. It's a playlist, and watch them all. They're about 30 minutes to an hour. And they are all information like this on how to learn to trade on the stock market. And we're doing an overall everything lesson. It's not how to day trade. It's not how to scalp. It's not how to long term. We are learning everything we can about the stock market so we can make the best decision for us and our financial situation. So that applies to everybody. MACD. Get back to MACD, guys. My shameless little plug about my playlist that you can watch. Is MACD a leading indicator or a lagging indicator? So MACD is a lagging indicator. After all the data used in MACD is based on the historical price action of the stock. Because it's based on historical data, it must necessarily lag the price. However, some traders use MACD histograms to predict when a change in trend will occur. For these traders, this aspect of MACD might be viewed as a leading indicator of future trend changes. So that's why the histogram is a little bit different. Because the histogram, let's go and zoom on bigger. The histogram, the MACD is the line. The histogram shows current, and this shows old. That's why it's not the same. I see. So a MACD positive or bullish divergence in a situation in which MACD does not reach a new low, despite the fact that the price of the stock reached a new low. So the MACD does not reach a new low, but the stock reaches a new low. Okay, can we find that? Let's see. We'll lower this guy. Bring this guy down. Open up our MACD so we can see here. Come on. So, the stock reaches a new low. Like right here is its new low. But the MACD didn't hit its new low because MACD line low is here. It didn't hit its new low on the low. So what does that mean? This is seen as a bullish trading signal, hence the term positive bullish divergence. If the opposite scenario occurs, the stock price reaches a new high, but MACD fails to do so. This would be seen as a bearish indicator. So if it reaches a new high, but the MACD line doesn't, but it does. Okay, so we don't have any of those, but we did have the lower low one. So if the opposite scenario, in both cases, the setup suggests that the move higher lower will not last. So it's important to look at other technical studies like the RSI discussed above. So let's see this low low run right here. Low low. Where's the lowest on the... We got to zoom in a little bit. Okay, so we have a new low low here. MACD converges up. So it's probably not going to stay. I don't know if that's a good example. I wouldn't call that an example. Strike that from the... Strike it. Strike that example. So now we know. If we don't have an example here to show you, but if you have a new high and the MACD line doesn't show that movement, then most likely the high isn't going to last. That's what they're saying. Or the low low. So if it's low low but the MACD line isn't downward trending, then most likely that trend isn't going to stay. That's what they're saying. But to double check with the RSI. The bottom line, MACD is a valuable tool of the moving average type, best used with daily data. Just as a crossover of the 9 and 14-day SMAs may generate a trading signal for some traders, a crossover of the MACD above or below its signal line may also generate a directional signal. MACD is based on EMAs. More weight is placed on the most recent data, which means that it can react very quickly to changes of direction in the current price move. But that quickness can also be a two-edged sword. Crossovers of MACD lines should be noted, but confirmation should be sought from other technical signals, such as the RSI or perhaps a few candlestick price charts. Further, because it's a lagging indicator, it argues that confirmation and subsequent price action should develop before taking the signal. So that is it, guys. That was just an advertisement. This is so that we get their Vanguard personal service assistance. But we don't need it because we're learning on our own. We got the money team right here to help us. So that is the MACD, guys. We looked at the MACD. We enjoyed the MACD. And we're gonna do more to understand the MACD. Don't you guys worry. How do we get these indicators off? How do we remove an indicator from this baby? I don't know. So I know how to get an indicator. I don't know how to delete an indicator. Right here? Oh, it made it big. Oh, look. You could close them right here. Ah, I did it. Did we close them? No. Oh, right here. Yes. Man, I figured all that out. That was a lot. Sometimes it's hard, guys, just figuring out how to use the program. So we could put a MACD. Yeah, put the MACD. There it is down there. Let's move this guy up. And give us a MACD. What other indicator? Let's throw some Bollinger Bands on there. I like some Bollinger Bands. Yeah, look, there's the Bollinger Bands. What else should we throw up on our things? Let's throw an RSI. Everybody needs an RSI. There's the RSI down there. What other indicators? Let's throw our MACD up there. Look at us. Oh, we got two MACDs. Throw that MACD away. Okay, now we need the AMD. Where is it? Oh, there we go. Okay, guys, look at us. Look at us. We're almost ready now. We got all of our indicators down here that we know about. So we got some Bollinger Bands on there. Hey, guys, what did we learn about Bollinger Bands? when there's a tight squeeze right here like this. See this tight squeeze? We learned it with Bollinger Bands. If there's a tight squeeze, there's going to be some volatility afterwards. It's true, too, because look at this little tight squeeze, and then there was some volatility. Man, it's getting tight. Tight squeeze. Tight. So there we go, guys. We learned about a bunch of indicators. How great is that? So now that we've read our article, we can check out the news really quick, and then we're almost an hour. Let's call it a day after we just zoom the news. We're not going to do a lot, though, because you know how I get worked up. I get worked up over all these darn people running our government, guys, and running our money. They're not even government people running our money either. Like, I could understand if the senators had a hand in running our money, but that's not who runs our money. It's the people who stole it, the bankers who stole our money in the middle of the night. So we have to learn everything we can learn, guys, so that that can't happen again. If more people are money educated, then less people can do weird things with our money in the middle of the night. GoPro stock plunges on Q1 earnings. Why? What happened, GoPro? Guys, go buy your GoPros. I want to watch more things anyway. Go buy a GoPro, slap it to your chest, and vlog that so I can watch it. I'm running out of things to watch. What does it say about GoPro? And think its founders was such a beefcake. Carinza. Who's the beefcake? I got to look who the PayPal founders are. See? This is why I don't like to look at the news. People like that. Carinza said that they're beefcakes. Who's a beefcake? Which one of these guys? Guys, which one of these guys did Carinza think is a beefcake? Or was that... Oh, I take everything so literal. Is that a joke? Or did she literally mean it? Which one of these guys is a beefcake? Max? The dawn of PayPal. Max. That's the one? Max? We got to look at other pictures of Max, guys. She said he's a beefcake. I think I need to see what the definition of a beefcake is. That must be a word. A beefcake is a photographic display of a muscular male physique. A man of the type featured in such a display. Oh, a beefcake is a good thing, and I'm looking for some beef here. He said muscular? Wait, what did it say? Muscular male physique. Okay, this can't be the guy she's talking about, not Max, because I see no muscles. Okay, hold on, guys. We got to look at this other guy. Who's the other guys? Maybe it wasn't Max. Maybe we do have a muscly guy up here. Luke? Nope. No muscle on Luke. What about Peter? Peter looked like he might have some muscle. I don't know, Peter. Well, let me see. Peter. I don't know, man. Let me look at Peter. Peter Thiel. Maybe she means him. He's the closest one to having a muscle on his body. He's got muscle in his face. Yeah, I'm not seeing beefy. Oh. He's got a husband. Okay, well, that's not the beefcake either, because all the muscle I see is in his jawline, and it's kind of like, we don't know who Ken is. You? Okay, he's got some facial hair. Let's check out you. Maybe he's the beefcake. You know? I'm just not seeing any muscle whatsoever. There's a lot of you pants, so I'm guessing it's just these first ones. But I'm not... Yeah, PayPal founder, first YouTube engineer, talks about his work. I think either she was being facetious, because beefcake, we looked it up. Beefcake means muscular male physique, like this. Beefcake. Or, unless she meant beefcake like this. But I did not see beefcake on the founder's page. I don't know. Let me know in the comments which one you think she meant. Did she mean Peter, Max, Luke, Ken, or you? Let me know in the comments. Called that guy a beefcake. China and U.S. debt woes may dominate G7 finance chief talks. Okay, why the U.S.? Credit crunch didn't start with SVB's collapse. It may not end there. Housing market, tight inventory, and still high mortgage rates keep would-be buyers sidelined. Stop trying to buy their expensive-ass houses. Sit back and wait for prices to go down or wait for the people to die. Do not buy somebody's house who bought it for $50,000 and lived there for 10 years and did 2 home improvements. Do not buy their house for $1 million. Don't. They didn't live in their house for 15 years and just decide and all of a sudden they deserve that money. They don't deserve it. People now buying houses do not deserve to pay more than people that bought houses 20 years ago simply because they were born 20 years later. The order of our birth does not decide our worth. That's ugly. Just because we were born 30 years after people does not mean we don't deserve to buy a house for a decent price. And guess who's selling the houses, guys? The people who bought them 30 and 40 years ago. Just because they bought a house before you does not mean that they deserve it more than you. Stop buying these expensive houses. You cannot buy something expensive and expect them to lower the price. In order for somebody to lower the price, guys, you have to stop buying it. When I was a little girl, I wanted a Furby. Oh, I wanted a Furby so bad, and we were so poor, and as soon as the Furbies came into the store, they were gone, and my mom never had money for them, and it was the hottest present, and my mom ended up buying me a Furby for $50 from a silent auction at a Salvation Army. It was like the most random, rare place to get it. And it was the only one there, and I ended up getting my Furby. But guess what? If she wouldn't have bought that Furby for $50 and nobody else would have bought those Furbies for hundreds of dollars, nobody would have needed to buy them for $100. They would have made more, and people would have gotten them at a regular price like you can now. We need to stop being so impatient. Perhaps you don't get to buy a house in your 20s. Wait until your 40s. Because you know what? By the time you're 40, those people that are trying to sell their house and they're in their 70s for $2 million, they're going to be dead. Dead. Not to be mean, but that's what time says. They're going to be dead. And if we didn't buy their house for $2 million, guess who's going to sell it for less? The bank or their kids. So stop buying billion-dollar 2-bedroom houses. Don't do it. Refuse. All these people worried about their buying a house. Stop worrying about buying a house. Worry about the state of our country. You don't need a house. Our country's going to burn. We got crazy people, evil people burning our country down, shooting people for no reason. Worry about that and then worry about buying your house. Why you want to buy a house anyway in a neighborhood that might just burn the heck down because our police cannot police correctly in 90% of our neighborhoods in the United States. You want to know where they're not going to burn it down? So unless you have money to buy it in a place like Calabasas, you probably should be avoiding buying a house right now anyway. What about the water crisis? Are you going to buy a house in an area that's going to have a water crisis in a couple years? Stop buying their expensive houses. If people in their 20s would stop, learn. If you want something from your parents when you're a little kid, what do you do? What do? You either do what they say or you don't. You throw a little fit. We've done what they said. We've done it our whole lives. I've done what the government tells us to do for 40 years, and it hasn't got me anywhere, guys. So it's time that us, the people born a little bit later, throw a little fit. And I'm not talking about, oh, we're going to protest and burn stuff down. I'm talking about Martin Luther King type protesting, guys. Stop buying stuff. Stop getting on the bus. Stop sitting at restaurants that don't want you there. Just stop. If you could just stop for a month, I'll tell you what, guys. If every single person in the United States stopped buying houses for a month, stop. Do not buy a house for a month. If you are not a millionaire, do not buy a house. If you guys, there's only 22 million millionaires in the United States. 22 million millionaires. So the rest of us, 300 million of us, if we stop buying houses for a month, no market because we're not buying houses. I promise you they'll go down. Maybe not down enough for you to buy them, but down. And if we keep doing that kind of stuff, it will go down. And then people be like, Squealer D, where are we supposed to live? Live in a dang tent. If that's what it means, live in a tent. Live in your car. Lots of people have to do it right now and they're poor. And guess what? They didn't do anything wrong. And it's because people who can keep buying these houses for overpriced amounts, keep buying these houses for overpriced amounts. If you keep buying Louis Vuitton, they're going to keep selling Louis Vuitton for high prices. And then poor people want Louis Vuitton and then they can't afford Louis Vuitton. So what do they get? They get fake Louis Vuitton, right? So what are we doing right now? We're going to make fake houses rather than lower the houses on prices. We're just going to build like little huts all around the world and have little favelas. Is that what we're going to do, guys, rather than just stop buying the expensive houses? It doesn't make any sense. Anyway, I'm off my soapbox about houses. Stop buying houses. Do not let them charge you that much. Let me know in the comments which one of these guys is the beefcake that old girl was talking about. I need to know who was the beefcake. And let me know in the comments what finance news you thought was the most interesting today. Not that we talked about, but just that you've seen. I expect you guys every day in this finance. If you're not in Yahoo Finance, go to another finance. I want you looking at these trending tickers. These are the tickers, guys. We need to start learning these. Airbnb's trending. Look at it. It's trending down. Airbnb dropping down like a dog. Why? Why is it dropping down, guys? Because Airbnb went crazy and thinks they can charge everybody $1 million to clean up. Ridiculous fees. And people were just paying them. Why? Stop going to Airbnb, guys. You know there's these things called hotels, and you could stay there. And they don't charge any of the crazy fees that the Airbnbs charge. And they don't make you clean your own room. Stop going to Airbnbs until they lower those prices back down. Airbnbs used to be fun. They used to be a good deal. And now they're ridiculous. You want to know why? Because the ridiculous owners of the Airbnb know that they can charge you ridiculous prices. And they know that you're going to pay them. Stop paying them. Anyway, that's it, guys. That's MACD for the day. That's our learning. And tomorrow we will be back at it. So like I said, catch up in the stock market learning portfolio. Catch up to where we're at. And I will see you tomorrow, same time, same place. Be there or be square, neighbors. Have a great, I can't even talk. Be there or be square.